It's officially Trump tariff week, I think. Every news source has a different date as to when these things actually start, but Canada's website says it starts tomorrow, so I'm going with that. Mortgage rates do not seem to care about these tariffs at all, and they remained pretty much unchanged. New listings, overall housing inventory, and the number of people applying for mortgages all saw a small decrease last week. We also had the Fed meeting where, to nobody's surprise, the Fed did not cut rates, but they did let us know they're keeping their target unemployment rate at 4.3%, so we have something to be watching for moving forward, and we'll discuss in a minute. We're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is February 3rd. Let's see what the data is telling us this week. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Let's start with market news. First, the Fed meeting. No, they didn't cut rates, nor was there any reason for them to. As we talk about every week, the labor market is too strong for the Fed to cut rates. Case in point, here is the jobless claims chart for last week, and you can see we had another very big drop. And what the Fed believes is there are too many people having too many jobs, making too much money, and this causes them to think we are in danger of a new wave of inflation. So they want to see jobless claims going up and ultimately unemployment going up. So if you want mortgage rates to come down, it's going to start with this jobless claims number going way up. And then the Fed also let us know they are keeping their target unemployment rate at 4.3%. And looking at the chart, the only time we even touched 4.3% was July of 2024. And since then, we've just been going straight sideways from 4.1 to 4.2. As of December, we're currently at 4.1. But what's important is that they're giving us something to be looking for. So if you see this number get above 4.3%, then the bond market should start dropping the 10-year, which would lead to lower mortgage rates because it means the Fed will be cutting rates shortly after. And lastly, just my personal opinion, I think these tariffs are going to be short-lived. Personally, I think Trump is just trying to use them as leverage for negotiation, and he's trying to show everyone as quickly as possible that he will actually do what he's saying if they don't come to the table. And of course, playing off the fact that these other countries have more to lose than we do. So hopefully, this is all short-lived. But what do I know? Okay, moving on this week, if you missed it, I wanted to share with you this super unique little tree house I just listed. If you're a first-time home buyer who just wants to stop renting, or if you're an investor looking to make a one-of-a-kind Airbnb, you've got to watch this one next. This home has so much potential. It's literally an 8-minute drive to downtown Dallas, and it's a nice neighborhood. If you're familiar with Oak Cliff, and assuming this area must not be nice, then you've simply never been to Beckley Club Estates. It's a charming, quiet little neighborhood, and more importantly, this home can be yours today for just $250,000. Again, just 8 minutes from downtown Dallas and in a nice neighborhood. There is so much growth and so much to look forward to here in this area, all for $250K. So if you might be interested in that, do not miss this video next. All right, moving on. Let's start with national housing inventory. This week, we had a decrease of 1,601 right here. Less homes for sale in the country. This gets us to 28% more inventory than we had last year, to a total of 634,979 homes available for sale in the country. And this same week last year, inventory was only at 497,347. So way better than last year. Then for reference, the all-time inventory bottom of 2022, we only had 240,000 homes for sale. The peak of last year, we got all the way up to 740,000 homes for sale. And this same week in 2015, we had about 936,000 homes for sale. And again, we're currently at about 635,000. So we're getting back to a normal inventory. Now we're looking at new listings. This week, we actually had 2,000, you can see this drop right here, 2,989 less new listings, to a total of 48,886 new listings last week, which does for this 1 week get us below 2024's new listings. But that's just 1 week data, and as you can see, all of the data gets really tight at both the beginning and the ends of the years. We're really not going to know what's happening until more like this range, more of the summer. That's when most people list, so we're going to have to see how many people are really going to list this year then. But even so, we're still at a good pace. This is the first week that we've been below last year, and we could jump right out of it next week, and I think it's likely that we will. Now looking at pending sales, we have 2% fewer sales pending than we did last year, but again, whoops, as you can see, the data gets really tight at the beginning of the year. We're going to know more once we get into this March, April, and on. But overall, this number should be trending up until May or June. But this week we have 282,172 homes under contract, which is about 30,000 more than we had last week. Then the last thing we cover nationally is a percentage of homes having a price cut. Every year, it's normal for about a third of homes to take a price cut before selling. Looking at the national chart, we're at 33.06% of homes having a price cut this week. And as you can see, last year, the darker red line, it was a couple more weeks before, this line started to climb. And of course, these other years, it was way later this year as well as that year. But the major difference of this year compared to all of those years is this is the only year where mortgage rates climbed all through the winter and still haven't come down. In these other years, mortgage rates were dropping in December and January, causing a demand increase to start the year, and also causing inventory to continue dropping until March or April. So more demand in those years obviously means less price cuts at the beginning of the year in those years. This year is different. And this year it's actually possible that we've already seen the inventory bottom for the year in January. And while that's not usual since COVID, it's actually been in like March and April. It is actually normal in a normal market for the bottom to happen in January or early February. So it also wouldn't be unreasonable for the number of homes taking price cuts to start climbing earlier in the year as well as we trend back towards a normal market. And this is just one of many, many things that would suggest home prices are likely going to remain pretty flat this year. Unless, of course, mortgage rates drop significantly, which I'm not feeling very optimistic about, just given that the labor market has remained so strong and there was really no reason for the Fed to cut rates until the labor market breaks. But last year we got as high as 39.9, the year before we got as high as 39.2, then in 2022 we got as high as 43.2. And I also want to point out, don't think that just because this number is starting to curve up earlier in the year means that it has to go higher, because you can see last year we started curving up way earlier and we got pretty much exactly to where we were the year before, even though the year before we didn't start heading up until, almost May. So I remember last year a lot of people were saying, look how early it's going up, there's going to be price crashes. There were no price crashes, and ultimately these two numbers ended up about the same. So don't think just because it's curving up early means it has to go way up here. Okay, moving on to mortgage rates. We started the week at 7.07 and we ended at 7.05. So almost no change, one of the flattest weeks we've had. But the big number I want to point out to you is January 31st, a year ago, mortgage rates were at 6.75. We are literally 0.3% higher than we were a year ago. That makes such a huge difference on your monthly payment as well as on demand. Which brings us to mortgage purchase applications. So this week, we're basically flat. We saw a 0.37% decrease in the number of people applying for mortgages. So basically flat for the last 3 weeks, we've been right here. But we are still 5% above where we were a year ago, even with mortgage rates 0.3% higher. But this data, as you can see, it has some big swings and it doesn't really become reliable until, I would say, March or April, in my opinion. All of this data becomes way more reliable in this range right here. And then for context, I just want you to see, looking at the dark red line, how this went last year, because we're about in the same range of mortgage rates as we were in that time period. So what happened last year was we were between 6.75 to 7.5%. And in this span, we had 14 negative weeks regarding the number of people applying for mortgages, only 2 positive and 2 were flat. So currently rates are at 7.05%. We are dead in the middle of that range. And if that continues, we can expect something to look very similar to last year's mortgage demand right here. It's going to be a very similar line. But I've been saying this all of last year. There's no reason to believe mortgage demand is going to climb significantly with rates anywhere near this high, around 7%. Real mortgage demand comes in whenever rates get at or below 6%. The evidence we have for that is new construction has been offering below 6% rates for a long time, and they're selling way better than existing homes. Okay, moving on to the local markets, starting with Dallas County, looking at the MLS data. Starting with new listings. This week we had 555 new listings, which is 43 less than last week. So second week in a row we had a drop, which again, we saw that reflected nationwide. We had a drop this week. Total closings, remember these contracted 30 days ago, so not as relevant now, but we had 260 closings, which is 88 more than last week. Not surprising, as that was basically the Christmas New Year's week. So really, if we skip that week, we went from 232 to 260. Then the number of immediate sales, that is homes that contracted within the first week of listing. We had 31 of those, which is an increase of 10. We saw 324 contracts last week. That's 56 more than the previous week and the highest we've seen so far this year. And in total, there are 1,968 homes either under contract or pending, and that's 50 more than last week. Then moving on to Collin County, we had 373 new listings, so a small drop of only 9 less houses, still consistent with the national. 239 closings, that's 99 more than last week. Again, we're looking at the holidays. Now we're coming out of that, getting back to normal numbers. 31 immediate sales, 14 more than last week. 169 contracts, which is 6 less than last week. And in total, 1,546 homes either under contract or pending. That's 27 more than last week. Okay, let's move on to the Market Action Index. Let's take a look at Dallas County as a whole. And if you've never seen it, the Market Action Index takes into account all this data, puts it into one easy to read graphic with a number. Anything a 30 or below is a buyer's market. Above a 30, we're asking how much of a seller's market are we in? We're currently at a 37, which is a slight seller's advantage. And all we use this data for is to see, is anything looking weird or are things looking normal for this time of year? So let's see, prices were pretty flat all through December. We did have one jump last week, but we came right back down. Yeah, pretty much right back down as if that didn't happen. So prices are still flat. That's normal because this is the time of the year when prices should be the lowest. So they are the lowest. The difference here that you'll see in Collin County is Collin County has been dropping, whereas Dallas has been flat. So normal could still be dropping. That would be a normal market. Dallas has been not normal in that it's been flat instead of continuing to drop. Median price of new listings, even though this is kind of a big range, I would say this is pretty much flat as well because it's been pretty sideways. Even though the swings are bigger, they're kind of just going straight up and straight back down. Average days on market has been flat since January. Median flat at 77. Number of homes having price decreases, just like the national market. We saw our first little increase. Total inventory has been climbing. Unlike the national, we saw a little decline this week. Dallas continued to climb. And overall, the Market Action Index is actually heating up a little bit. So the bottom for the Market Action Index in Dallas was basically first week of December, and we have been heating up since. So overall, nothing really unusual here. This is the time of year where we should be starting to leave the bottom and things should be heating up. Doesn't mean it has to get crazy hot or anything. Again, I don't think we're gonna see a crazy hot year this year unless mortgage rates have a huge drop. I think we're gonna see a lot less volatility this year than we have the last few years. Now moving on to Collin County. As you remember, Dallas was a 37, Collin County is a 35, so it's definitely cooler. And for the first time in a while, we had a little jump in the median list price of Collin County. So it may be that prices finally, you remember Dallas was basically flat all through December. You can see Collin County was still trending down. So it may be that we finally found a bottom. That would be normal for this time of year. Median price of new listings has had a big jump over the last 3 weeks, but you'll also notice the Market Action Index, no real growth in that, even though, overall prices may have bottomed, new listing prices are climbing. I wouldn't be surprised if this came back down over the next week or two, just because we have not seen really a change in the Market Action Index. Interesting though, their median days on market actually dropped. Average days on market declined by 1 as well. Number of homes having price decreases, not really changing yet. Their inventory is climbing as well, although this week it definitely climbed slower than it has been. And as I said, the Market Action Index not really heating up yet. Probably will be finding a bottom in the next week or two. But yes, overall, everything is looking normal coming into February. Then I just wanted to show you, looking at pending sales in Dallas County, we are well above the previous 2 years. And it looks like we're going up a little bit quicker. So last year we had 1,412 homes pending right now, and this year we have 1,634 homes pending. So you can see every year we're growing, and a lot of this has to do with Dallas is the #1 fastest growing metro in the country. We have a lot of people here moving every day, so it would make sense every year for pending to be increasing. And you can see that in Collin County, which is actually the number 2 fastest growing county in the country. Every year, Collin County has a much bigger jump because there's a ton of new construction and still a ton of room to grow, whereas most of Dallas is already developed. Whereas much more of Dallas is already developed. But you can see even first week of the year, we went from 718 to 1,010 to 1,225. And then this week we have about almost 500 more homes than we had either of the previous 2 years pending. So that's just an easy way to see how fast the DFW Metro is growing. And now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same market action index number we just talked about. Remember, a 30 or below is a buyer's market. So starting with the absolute hottest cities, Carrollton, Texas remains in number 1, where it's been for a while. Richardson heats up 2 spots to take number 2 this week, and Ferris cools off 1. Coppell heats up 3. Plano remains. Grand Prairie cools off 3. Louisville cools off 1. Grapevine and Seagoville remain at 8 and 9. And Irving jumps on at number 10 to replace Allen this week. Then we like to zoom into specific zip codes. The absolute hottest is Carrollton, 75007, followed by Plano, 75093, Carrollton, 75006, Grand Prairie, 75051, Grand Prairie, 75052, Plano, 75074, Plano, 75025, Richardson, 75082, Carrollton, 75010, and Dallas, 75234. If you have a home in one of these zip codes, then you can sell for top dollar. Now we're moving on, same thing, but the coolest markets. Blue Ridge remains the absolute coolest city, and remember, anything below Lavon, this is going to be a buyer's market. And there is a lot of good new construction in Lavon at low prices, but you do have to watch out for the tax rates over there. But I do think over time, this area is definitely going to grow, so now may be a good time to get in while it's a buyer's market. But the absolute coolest remains Blue Ridge, all the way down at a 26.71, firmly a buyer's market, followed by Sunnyvale, which cooled off 1, and Leonard heats up 1, so those 2 switch spots. Lavon remains. Van Alstyne cools off 1, Nevada cools off 2, Anna heats up 2, Rockwall heats up 1, and then Salina and Royce City remain the 2 hottest cities on the coolest cities list. Then looking at zip codes, the absolute coolest, Blue Ridge 75424, then Sunnyvale 75182, Leonard 75452, Lavon 75166, Dallas 75219, Grand Prairie 75054, Van Alstyne 75495, Nevada 75173, Rockwall 75032, and Anna 75409. Remember, if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. Thank you for watching. I'll see you in the next video.